Okay, welcome back. I'm sure you probably heard of option trading. And so I'm going to kind of discuss some of the elementary ways that you can trade options and maybe why you want to do so. Um, One of the ways is it gives you access to more shares at a much cheaper price. Let's try going over what an option is. An option is always what? You have a choice, right? That's what the word option means. Remember, call options versus put options. And we're just going to go over call options today. So what is a call option? Call options are financial contracts that give the option buyer the right, but not the obligation to buy a stock, a bond, a commodity, or other asset or instrument at a specific price within a specific time period. The stock, bond, or commodity is called the asset, or the underlying asset. A call buyer profits when the underlying asset price increase. If you want to buy a put, that's when you actually have the right to sell the asset at a specific price or before the expiration. But we're going to talk about call options. All right. And I'm going to kind of show you the best way to do this is I'm going to go to Yahoo. Okay, Yahoo Finance, as we always do. I'm going to show you exactly what it is and what we're talking about. So I'm going to use these. Let's try this. Lunar Technologies. Somebody was really curious about this stock in particular, and so we'll look at some options that it particularly has. And when you may enter points are a little bit difficult, but let's just talk about what an option is. So right there, it has a button, and some of the companies have options and some don't. If they haven't been in the NASDAQ or uplisted for at least 6 months, they don't have options yet. So not all companies, or if they're not a big enough company, they won't have options. So we're going to go to options. All right, now this looks really, really, really confusing. So we're going to go over a few things of it. This is the price at which, or the date at which the option expires. Okay, there's an end point to a date. So I'm going to pick a date like a year from now. Okay, and it's going to show me that if I'm buying a call option, remember buy to open, call option, I have the right to buy 100 shares, okay, at this price or any price that I want. I want to buy 100 shares of this company, Luminar. It's right now at $16.28. I want to buy it for $2.50. I can, but it's going to cost me a huge premium up front in order to do so. I'm going to tell you how that works when we look at price. The strike price is the price I want to buy the stocks at. When you see this shaded area, it's called in the money. And when you have this white or non-colored area, it's called out of the money, OTM or ITM. And this is close to the money right here, the money line. So this is just under, just over. Okay, this is deep in the money, and this is deep out of the money. All right, so those are some really big concepts to begin with. The other thing is, what this does is it gives you a right to buy 100 shares. Now, if I get to, let's just say, this is the price you have to pay. So if I wanted to buy one option, which is worth 100 shares, and we're going to buy it at $12.50, okay? I have to push the decimal over 2 spots to the right, 1, 2. It will cost me $590 for the rights to buy one option, okay, of Luminar, which I will get at the price of $12.50. And it's good for till January 2023. If it goes up, I can sell that option anytime. I could sell it tomorrow. I could sell it in 6 months. I can sell it in 9 months. And I'm not going to go over, thetas and the loss of values yet that you get with over time, how these options sometimes over time lose a lot of this money. But if the price, and I'm thinking it's going up by this date, okay, for sure. And this is a long option. There's short options that you can do. So if I wanted to bet on, March 4th, and that's only like less than a month away. They're much cheaper, as you can see. So I can get maybe a 1250 for what, $385. But again, all right, it has to be in the money at that. And then guess what? I would have to pay, let's move the digit over to $1,250 because I'm buying 100 options at that price if I keep the options until expiration. So if March 5th rolls around, they're going to look for $1,250 in my account, take it out, and they're going to give me 100 shares of Luminol, this company, whatever company you're buying your option on. And that's kind of how it works. These, okay, are the last price. This is what somebody's bidding on it. This is what they're asking, okay? And you always put in a limit bid for it. So I will actually do a video and show you how to trade and actually how to do an option. I've been very successful with option trading, but I pretty much only stay to call options. We'll go over covered calls next time as well. But some people want to know how you can get exposure, okay, and to the market and more shares for less price. So essentially, let's go back over that one scenario that I said in this case. So in order to make money, I'm going to have to take the $1,250 or 12.5 and add the 385 to it. So I'm going to really quick do it. So that's 16.25. So the stock price has to get to 16.25 for me to really actually make money. If it doesn't, I'm not going to make money. Now, let's say I buy it, okay, and it goes out of the money. Well, the only thing I lose ever is what I put in to begin with. And that's why you have a limited risk, okay, with buying call options. And that's why I prefer those more than, they're less risky than some of the other options. All right, so the only thing I could lose in this case, what was our 1250 right here, is this $385. Remember, I had to move it over because we're looking at this times 100. I pay $385, which gives me the rights to $12.50 at a strike price of $12.50. Now, what does that mean? If this goes under $12.50, I just lose my $385. If it stays above that and continues to go up, and isn't it close to 16.25 right now? So that is not a bad, that's not a bad price, and that's deep in the money, okay? Because look, all it has to do is go up and I'm making money from here on in. So if you're really thinking that this stock in particular is going to go up, and I haven't looked at the technical analysis for the stock, okay, that's how you would buy an option, all right? And you click on your inside, whatever your account is, whether Schwab or Fidelity or Robinhood, it's going to say option trading. You're going to buy to open, and you're going to buy one option. Make sure it's only one. It's very important that it's only one. And then you're going to hit limit. You don't want to put market order. You never want to put market order. And you want to bid a little bit below it. So in this case, we don't look like we have any bids. So I'm going to go to something a little bit more juicy for this one. We'll go to Apple because we'll have plenty of bids on Apple. And I'm going to go to their options because they definitely have options. And we'll go to our March 4th. That's a shorter term option. So I'm going to click here to March 4th. Okay. And you can see like this is $7,000, $7,000. So you have to have a hell of a lot of money if you want it that deep in the money. All right. But we're going to see, where's all their bids? We usually have bids and asking prices. So a lot of times you'll see this. I think it's because of what time it is at night and we don't have it. Right here is how many people are actually have open and are selling their options to you. Or you can tell you why they sell them because they think the price is going down. You think the price is going up. That's one of the reasons why they sell them. Plus, they do get this money for loaning you 100 shares if they own them. That's usually the case. That's what a covered call is. So right now, there's 3,705 people offering $180 strike price for 100 shares of Apple, and it's going to cost you $222 for it. So there's, no matter what you're thinking. Hopefully you don't have too many questions over options. I can help you out, and we can go over a few other things later, but this is just the first step to option trading and what that means. Remember, you can sell at any time. So let's say I bought my option again, my Luminar, and I bought this, what was it? Oh, this is Apple, I'm sorry. I bought a $150 Apple, and I bought it like 6 months ago. And I bought this one for, I don't know, this is 26, 24. I bought it for $400 because it was so cheap back then, let's say. And now it's worth 26, 24. I can sell it for that price, and I never have to take ownership and pay what, $15,000 for 100 shares. Most people, 99% of the people, sell their options before the expiration date. All right, as always, I hope this finds you well, and God bless.